Hello everyone, welcome back to our channel Part-Time IT Investor. Today is 8th of April. So, Bank Nifty has rallied more than 4,500 points starting Monday. That's a historic move of around 8.6% in 3 days, of course, due to good news with respect to Iran, US, Israel war. Okay, so if you look at my option screen right now, you will see a brutal 30,000 loss, okay, on my ratio spread which I am deploying against my portfolio. So most retail option seller would have completely blew up their account this week, okay, but today I'm going to show you why I'm not panicking and how a human mistake doubled my loss and how my AI delta calculator executed a mathematically perfect hedge that saved my entire portfolio from disaster. Alright, let's move to the next point. Now, here are we on my closed hedge position. So you can see the loss is around 26k. So to be very frank, it was not 26k. So by end of the day, I lost almost around 30k. Okay, as you can see, Nifty position, I think even after 6% up since Monday, I didn't conquer much of a loss. Okay, it is Bank Nifty, which you can see here, almost 25,700 plus another 4,000 added by end of the day due to my manual adjustment that costed me this loss. So at the beginning of the day today, I was sitting on 15k loss. Okay, but as usual, I thought I myself designed the algorithm. I know better. I can try to navigate this gap of opening to further reduce my loss from 15k to maybe around 5k. So in the past, I was able to do so. Okay, but this time, okay, it only added fuel to the fire. So my manual tinkering, okay, lead to the loss of almost 30k. So the human mind is the biggest bug, okay, in any trading system. So stick to your system, keep your emotion out of it. Now, here is a twist. So this 30k loss didn't destroy my account, okay. This didn't destroy my account. Now the question will be why. So as you can see on right hand side, okay, this is my portfolio. Okay, so I trade the option against my portfolio, okay, acting as a covered call. Okay, so what happened, okay, if you see over here, let me move this. Okay, so what happened if you see that at the right hand side of corner of the screen, okay, so my loss was hedged against the profit in my portfolio, which is showing around 21,700. Okay, so in my portfolio today, it was showing profit of around 21,500. To be exact, it was around 24k. Okay, so this saved my M2M loss since I was trading the option against my portfolio. Okay, I was able to reduce that loss. Okay, to near around 6k. Okay, so the math worked perfectly fine. Okay, which was calculated by the custom AI delta tool which I used to calculate my delta. Okay, so delta of my profile is calculated. Against that I am taking the hedge. Okay, so if market fell by 1%, how much my portfolio will fall? Accordingly I am taking the position in option using bear call spread or ratio spread. So this ratio spread saved me because today I booked 24k profit in actual holding versus loss in option. So A algorithm balanced the scale flawlessly. Okay. Loss on hedging instrument, okay, isn't a failure if you understand that underlying asset rises to offset it. So what does that mean is that my option is my option strategy, let's say, is failing me by 10k. Okay, my holding, okay, is rising by plus 12k. So at least speaking, if I book a profit of 12k on my holding on any of the profitable stock, okay, so I will be able to easily offset this minus 10k. Okay, and this is where you should stop guessing your hedge ratio and start using the exact delta calculator, okay, for your profile. So I will pin the link of the delta calculator, which is AI calculator, in my comment of this video. Okay, please go ahead and check that and free to use that. Now moving to the next question. So how many times this kind of scenario can happen? Because we cannot simply end up selling our portfolio, okay, to hedge our option loss. So it should be once in a while ratio where we are trying to book our option losses against the portfolio. Most of the time we should have a strategy such a way where we should be having margin of around 10%. Okay, so let me answer that question in the next slide. Now here if you see Nifty, Bank Nifty has increased, okay, almost by 8.92% starting this Monday. So within 3 trading sessions, it has rose almost by 9%. Now question will come, how frequently this kind of scenario can happen? For that I used AI to come up with number of weeks, okay, which where this can happen. So we have whole year. So even if we have this kind of instance 3 or 4 times, we will be able to make profit. But if it's more than 50% of the time, okay, so our strategy to cover our portfolio, okay, by selling ratio spread or bear call spread will not be profitable. So if you have doubt in your mind, yes, that is valid. The same doubt I was also having in my mind, and we will answer this question by using a pure mathematics and backtesting data. So let's move to our next chat. Okay, here we are on our next screen. So you can see I asked Groq AI. So we ask Groq AI. Sorry guys. So we ask Groq AI the same question. Okay, that lists down the number of weeks, okay, in past 5 years, how many times Bank Nifty moved more than 5%. Okay, we can see over here. This was my query. So Bank Nifty pulled the data from Yahoo Finance where the data is really available, wrote the Python script and did the calculation for us. So numbers will be surprising guys, as you can see over here. Okay, only 8.1% time. Okay, Bank Nifty rose more than 5%. Okay, and 5.4 times it fell more than 5%, which is 5.4%. Okay, so overall if you see, okay, that number is roughly 14% out of 100%. So in whole year, okay, only 14% of time we can encounter this kind of volatility. Okay, so that is fairly low. Now only thing which I need to fix, the way I am able to mitigate the rise or volatility in Nifty. Okay, same way I need to uh, avoid adjusting, okay, Bank Nifty. Okay, so I think here adjustment is a trap. Okay, so I will simply avoid adjusting. Okay, and let the strategy and system run for me. Today I would have easily reduced the loss. Okay, I would have got minus 15k in option, but on holding point I would have got 24k. So anyway I would have got 9k in profit, but due to my overconfidence and my manual urge, okay, to fix the things, I messed up. Okay, so this is a good learning for me as well guys. Okay, so I wanted to make this video just to showcase to my audience that everything is not that easy, okay, in trading, especially if you are trading part-time. Okay, so as usual I will punch order on Monday. Okay, and I will exit on Friday, trying to make some profit, which is 2.5% to 4%, maybe weekly, and with a stop loss of around 3%. So that is the main fundamental strategy which I'm using. But things can go sideways if the week is volatile. Okay, and for this kind of volatility, we need to bring in automation picture and need to eliminate human emotion. Okay, and it's very difficult to do it. So in a way, if I'm sitting in front of screen, I will make more mistake as against if I'm punching the order based upon the system. Okay, so this was a good learning guys, and if and grass is greener on other side. Okay, unless you practice yourself and you have your discipline, if even if I give you my strategy, okay, on paper with rules and regulation exit condition, unless your mindset is correct, you are bound to make losses. Okay, so that's the learning over here. So each person will be having their own trading style, own thought process and own discipline area, and that will decide that whether you are in top 2% who makes profit at the year end. So that's it for today guys. Bye bye for now. See you tomorrow in the evening. Good night.